Hi, good evening, everyone. Thank you for joining us for another session of Endowus webinars. Really special session today relative to some of the more heavy investment topics that we have done recently. So we have Candice here from Head of Payments, Marketing, CardUp, joining us today to talk about minimizing and optimizing your taxes. Candice, you want to do a bit of a self-introduction?
Hi, yes, thanks so much. So exactly like Sheng Shi said, I'm Candice Gallagher. I'm the head of payments marketing at CardUp, and I'm here to tell you how to optimize your taxes. Sheng Shi is going to talk about minimizing your taxes, and I'm going to talk about optimizing your taxes. So if you've got a credit card or you're thinking about getting a credit card and you have a tax bill to pay, this is definitely the webinar for you.
Yes, really excited to learn from Candice. So I'm also figuring a way out, after getting my income tax bill on how to go and make sure that I pay as little as possible, get as much miles as possible, and of course, in the process, pay as little fee as possible, right? So we have some great offers and promos for you today. Whether you're new to Endowus or new to CardUp, there's something special that you can check out on the YouTube description. So please, feel free to look at the promotions and also to ask us any questions on Slido, right? So again, please check out the description for any links that are helpful for you. And before I get started, just want to be very mindful that, with the disclaimers, please do not treat any of the sharing today as tax advice or financial advice. You can reach out to us separately if you have any questions around investing, around your taxes, and we would hopefully be able to help you with your inquiries. Okay, so I'm going to kick off the session first. So I'll be covering more about income taxes and how you should be thinking about reducing them. And hopefully, Candice, I heard that you don't have an SRS account. If you have any questions around, optimizing your taxes, what are the considerations for yourself as a foreigner, please feel free to shoot, and I'll be very happy to share my thoughts around it. Okay, so the first thing to talk about is really how are we taxed as Singaporeans? I think it's very clear to many of us here, and we have been reminded repeatedly by the Singapore government that we are paying one of the lowest taxes in Asia as well as globally, right? Typically, the idea behind income tax is to make sure that those who are earning more will pay more taxes. I think that perspective is very clear. But what happens in Singapore and in many other countries as well is that as you earn more money, right, a greater proportion of your additional income will be taxed, right? And we have a really detailed steps around income tax brackets. So you can see that for those who are those who are earning around 20,000, they will be exempted from any income tax. But any additional 10,000, 40,000, all the way up to in excess of 320,000, you might be paying 2% tax rate, 3.5% tax rate, 15% tax rate, and so on and so forth, right? So all these details are actually really readily available on the IRAS website. And you need the key takeaway for here is that the opportunity cost for you when it comes to discretionary tax hacks or tax exemptions is going to be higher the more you earn, right? So for those of you who are really feeling the pinch of higher income tax, this is where you really need to listen in and think about how you can discretionarily reduce your income tax. So what do I actually mean by discretionary income tax relief, right? So unlike many other countries, filing taxes in Singapore is really simple, right? We have a lot of help from the government because everything is captured within the system, right? So many of our tax relief, such as working mother-child relief, national service relief, parent care relief, all of these are captured by IRAS through their work with the other government agencies. And you within your income tax filing, you should be able to see it, right? If not, you'll be prompted to go and indicate that you are eligible for these reliefs, and very conveniently, all of these reliefs will be captured, right? On the other side of things are basically discretionary tax relief that you need to make a choice on whether you want to subscribe to, right? So what happens here generally is that the government is trying to incentivize certain type of behavior from us, and they will give us tax relief on it. So for example, if you were to allocate a bit more money into our MediSave account, right? So we are planning for our medical expenses, right? The government will give us a dollar for dollar income tax relief on that, right? Similarly, CPF top-ups for our loved ones, like our parents, our grandparents, etc., right? They will also give us tax relief on it because we are, they're trying to make sure that we are taking care of our family, right? So I think today I'm going to cover the SRS contribution, right, which is something that is eligible not just for Singaporeans and PR, but also for foreigners as well. So pretty much every Singapore tax resident will find the SRS contribution something that will be top of mind for them. Okay, so how do we think about SRS? So SRS, it's a voluntary tax deferment scheme, right? Like I mentioned just now, it's discretionary on our end, right? It's not part of the CPF scheme. It's actually administered by IRAS and the Ministry of Finance, right? So again, it's eligible for all Singapore tax residents. And you can open the account with any of the 3 local banks very conveniently. So what are the potential benefits for you if you were to do a SRS contribution, right? For Singaporeans and PR, there's a cap of $15,300 every year for you to to top up your SRS, right? So you're eligible for $15,300 worth of top ups, and through that, assuming that you're on the highest tax bracket, you can save up to $3,366. Right? Of course, you can top up $16,000, but of course, you won't be eligible for the tax relief for the additional $700. Right? Conversely, for foreigners, because they get less tax relief from many of the other reliefs that Singaporeans enjoy, you would be getting a higher contribution cap, and that would be $35,700, and you would save $7,854, assuming you're on the highest tax bracket. Okay, so some of the key features of the SRS account, you can open it, as I mentioned before, you can open it online with DBS, UOB, OCBC. It's really, really convenient. You don't have to go and queue in the banks, and there's no fees when it comes to account opening, right? And pretty much it's immediate, right? Any top-ups that you have done into your SRS account will immediately be reflected as tax relief the following year. At least, if you were not to leave it to the really last minute at the end of the year, right, it will automatically be reconciled with IRAS. So it's a really, again, really, really simple way to do taxes. I hope Candice agree with me that, Singapore taxes is really one of the best out there in the world, right? So something to take note of is that, the SRS account, the Supplementary Retirement Account, is, as the name suggests, it's for retirement planning, right? So any form of early withdrawals will lead to a penalty, right? So you will have to pay a 5% withdrawal penalty. On top of that, that amount that you withdraw will be deemed as if you have just earned that income, right? So it will add on to your taxable income, and then you may potentially pay more taxes. So there needs to be some form of financial planning on your end before you make that decision. Right, it's not the same as a savings account, basically, right? And then you also have to take note that, the age where you can first make a penalty-free SRS withdrawal is dependent on your first top-up, right? What do I actually mean by that? So previously, the retirement age in Singapore is actually 62 years old, right? I think just last year they have increased the retirement age to 63, and moving forward, they will increase it to 65 by 2030, right? So retirement age is increasing because the government is trying to encourage Singaporeans to work longer, right? So what happens now is that you really want to lock in that early withdrawal, the penalty-free withdrawal age. So even if you can just put in $1, transfer $1 into your SRS account, and then you are basically locking in your early withdrawal age, right? So that's something to take note of, right? And the last thing is really unfortunate. The SRS account only earns 0.05% per annum in the banks, right? it's the same across all three banks. Of course, you are free to go and look at other products, investment products out there, right? But the real idea, the key idea here is that you have to actively have a plan beyond just saving on tax relief, because your whatever tax savings that you might have made may lose out to inflation over a long period of time, right? So those are the key features. I hope that's very clear. And the last, I think I missed out on this one. The last thing is actually that the SRS has a smaller pool of investment options. So you're not able to, for example, buy foreign property using SRS monies, right? There are fewer investment options out there. And, certain fixed deposit products, insurance products will not be available on SRS. Okay, so SRS for foreigners, again, you have to get started as soon as possible, right? So, it's also very important for foreigners to think about tax relief and not just that, but also for retirement planning as well, right? So it's very easy to get caught up with, the very expensive rent in Singapore and just getting by when it comes to managing your finances, right? But it's important for them to also set aside some money when it comes to SRS. Right. So what are the key features of SRS that only applies to foreigners but not to Singaporeans? Right. So one feature that is really important is, it's actually possible for them to withdraw their SRS monies penalty-free earlier. Right. So for example, let's say Candice just came over to Singapore and started working. Right. So if she were to top up $1 into her SRS account in 2023, right, after 10 years, which is 2022, she would be 2032, right, she would be able to start withdrawing the entire SRS amount after 10 years, penalty free, without any 5% penalty, right? So that is something that is really important. Of course, that amount withdrawn will be subjected to income tax, because again, SRS is a tax deferment scheme, not a tax exemption scheme, right? So that is actually a benefit that is really useful, right? And then the other thing is that there is also some criteria around determining what's the income tax treatment when there's a withdrawal at the point of what's the income tax treatment at the point of withdrawal, right? Depending on the tax residency status of the individual at the point of withdrawal, there might be different income tax amount that they may be subjected to. So for example, if Candice is still working in Singapore, she will be enjoying the more attractive progressive tax rates that Singaporeans enjoy, right? And she also gets to enjoy that 50% deduction in the total taxable amount. So that I will share a bit more details on, right? But of course, if she were to withdraw at if she were to move back to where she came from, and Candice, where do you come from actually? UK?
Yeah, I come from England.
Yes. So if you were to move back to UK, it will be a bit different, right? So she would potentially be charged at a 15% tax rate or 22% tax rate. So the details of that actually, I've wrote an article on endowusinsights.com, and you can find the link and read more into it. Yeah. So yes, how do you think about? Okay, I think I went a bit deep with the foreigners part of things, right? But taking a step back again and looking at how SRS can help all of us, how does it actually work, right? So for example, in the example A on the left, if you were to earn an employment income of $100,000 after all the tax relief, and you were to not do any SRS contribution, based on that, tax brackets that I've shared just now, you will be paying $5,650 worth of income tax, right? But if you were to do a SRS contribution, the full $15,300 for Singaporeans, for example, right, your chargeable income will be reduced dollar for dollar. And what happens is that your tax payable will also be reduced, right? In this case, you'll be paying around $1,800 less of income tax, and that would translate to around the 31% tax savings, right? So again, the more taxes you pay, the more savings you are getting, because it's dependent on the tax bracket that you are at, right? So that's something to take note of. And just to rehash again, SRS is a tax deferment scheme, not a tax exemption scheme, right? So you can start withdrawing from SRS without penalty based on the first dollar that you have made your SRS contribution. So I was very fortunate because I was really a personal finance geek, and I top up my first SRS dollars when the retirement age was 62. Right. So for those of you who are Singaporean and are considering to do your SRS top ups later, because you might be concerned that maybe my income tax is not so high, right? I would say just put $1 in now, because the retirement age will be revised up at some point of time, right? So just do it. It's $1 only. You don't have to queue. You can do everything online. Okay. And I think the key feature about the SRS account is that only 50% of the withdrawal amount is taxable, right? So for example, if you have over the years accumulated your SRS money up to $200,000, right? Only when you withdraw that full $200,000, only $100,000 will be taxed, right? And they don't care whether the amount withdrawn is coming through capital gains, whether you've made any investment dividend incomes from it. They really don't care so much. They treat the money withdrawn as a full amount, right? Full amount in the sense that they don't discern between contribution and investment gains, right? And this is the case for Singaporeans as well as foreigners who have kept the SRS account all the way to retirement age. You can also spread your SRS withdrawal across 10 years. So you basically get to have a smaller amount every year, subjected to income tax. So that is the key benefit of keeping your SRS all the way to retirement age. Yes, so one common strategy actually is to try not to accumulate $400,000 into the SRS, because that $400,000 would equate to $40,000 a year spread across 10 years. And because $40,000, only 50% of it is being taxed. $20,000, only the amount that is considered to be taxed is $20,000. So that would mean that you are not paying any income tax on it, right? Because the first 20,000 of income in Singapore is not subjected to income tax, right? There's a lot of numbers that I just threw out, but the most important thing is not more than $400,000 spread across 10 years, right? But of course, I have full intention to have my SRS account be more than $400,000, because there's a way to it's okay for you to be paying income tax at retirement age, as long as you have made a fair sum of tax savings within your SRS account, right? I don't want to go into the details for that. There's more details on Endowus Insights, so please feel free to read up more on it and to ask us on the Q&A if you have any questions. Okay, so just to rehash the point again, you can withdraw your SRS earlier, but it will be subjected to a 5% penalty. And you just have to be very mindful that 100% of the withdrawal will be subjected to tax. And again, it's not a great outcome if you were to already be paying a lot of tax. So please plan your finances carefully before you make that commitment. Yeah, and I talked about how you should be looking at SRS for investments, because you're only earning 0.05% per annum, right? So you really have to do something about it, and not just think that you are a responsible adult after doing an SRS top up, right? So you need to take the additional step to think about how you can more meaningfully grow your SRS monies, right? Very unfortunately, many SRS account holders are still holding on to cash, right? You can see the data from MOF that 24% of SRS account holders are still keeping it in cash, right? So there's quite a few investment options available, You can do fixed deposits, REITs, anything that's listed on SGX, unit trust, insurance products, and whatnot. But just to share, we over at Endowus, we offer SRS investment products, and we have a range of products, from something as safe as a money market fund, which has practically no volatility, all the way to 100% equity funds with niche investment strategies such as, more tech focus or small cap focus and whatnot, right? So we have this special promo today. It's also in the YouTube description link. Please feel free to sign up, and you would just leave your email and password, and you will be eligible for a $50 off Endowus fee. Okay, so very quickly about what we do at Endowus, right? So we help people invest better to live easier today and better tomorrow, right? So this sounds like very lofty, airy-fairy ideas, but in the backdrop of the industry that we are at, right, where there's a lot of brokerages trying to tell you that you should be trading day in, day out, many greens and reds when you log into the account. We believe that investing should be more about financial planning and matching your life goals against the right type of investment product and letting your money grow on its own, right? So we want to help our clients have that kind of confidence and that kind of calmness when they look at investments. So nothing about reading Bloomberg every day, checking your trading account every day, but really more towards financial planning and making the good financial decisions. Right, we are Singapore's leading digital wealth advisor. We have more than 4 billion AUM across our assets in Singapore and Hong Kong, right? And we allow our clients to very conveniently invest in cash, CPF, and SRS, right? And of course, we really want to help our clients make better life decisions, and giving financial advice, doing this kind of educational webinars with partners is what we do a lot of, and you can check out our YouTube content, right? We also give access to a lot of institutional share class products because Singapore, unfortunately, still have many mutual funds that are laden with commissions and trailer fees, right? And of course, we have one of the most secure platform for retail investors because our clients have their own individual account. And basically, that's it. Candice, do you have any questions for me when it comes to SRS or tax relief?
Yes, I do. I mean, thank you so much, Sheng Shi, that you really made it super easy to understand. I, for one, didn't know anything about SRS before this call, and so you really broke it down really easy for me to understand. But I'm curious, you talked about how in your SRS you can have some money in cash and you can invest in other things. So you have full control of what you invest in?
Yes, full control and full discretion, right? So, in fact, there isn't any party at all that is like controlling your SRS account. You won't be directed to any investment products other than maybe receiving some marketing messages from the banks, right? So what happens is that you have to take responsibility as well, right? Because it's not like you are subscribing to a pension scheme and the money is invested for you in certain fixed income products and whatnot, right? So that is something that you have to take charge of.
Yeah, makes sense. Well, I know exactly what I'm going to do after this call. I'm going to do exactly like you said and open the account and put $1 in so I protect that statutory retirement age as soon as possible. I thought that
as
was
soon as possible.
Yeah, right. Yep. Thanks. I learned a lot.
Yeah, then why not you take over the next session around minimizing, not really minimizing, but optimizing your income. Yes, optimizing your income tax payments. Yeah, I have a lot to learn from you.
Yeah, great. Thanks. I would love to talk about it. And sort of the way I was thinking about it is you were giving us tips about how to optimize our tax bills from next year onwards. And my job now is to teach you how to optimize your tax bill this year. Because, right now it's tax season. I know a lot of us don't necessarily look forward to it, so we might as well benefit from it. But before I get started, would love to just sort of understand who we've got on the call and what is your biggest pain point when it comes to paying your taxes every year. So on the next slide, we've got a list of common pain points we find that our customers are presenting. Sheng Shi, if you could go to the next slide. There we go. So just drop in the comments section, which is the pain point that most affects you? Is it the large expense? I mean, I'll be honest, it is a bit painful every year when I see what my tax bill is and I've got to think, I've got to get all that money and send it to the tax man. Is it your payment options? Right now, IRAS doesn't accept credit card payments. And is that frustrating for you? So if it is, drop number 2. Is it a time-consuming process? I mean, I will say, I've come from overseas, and the Singapore tax process is way easier than what I've experienced overseas, but still, it's a process. So is that frustrating and time-consuming for you? Number 4, have you faced late penalty payments? Late payment penalties, I should say, the other way around. Or is it all of the above? So just drop in the comment section. Which ones are you facing the most? Would love to know. And maybe Sheng Shi, you can tell us, are there any common numbers coming through?
Maybe I can just share my own thoughts on this as well.
Okay, yeah. Which is yours? Yeah, tell us.
Well, definitely number 2.
Okay.
I have quite a few credit cards, and obviously I'm trying to get as much miles and cash back from whatever bills I can pay with. And yeah, it's just frustrating that some of these, some day-to-day expenses, unfortunately, we are not able to get rewards on it.
Yeah, well, you've come to the right place, Sheng Shi. You've invited the right person to join the webinar, because that is exactly what I want to talk about. And for the record, I did not ask Sheng Shi to give me that answer. That is 100% a real answer in the moment. So, okay, so let's get into it. So you may, whether you are paying your taxes for the first time, or you've been paying your taxes for years, there are already a few ways you can pay your taxes. So you may know already about GIRO. Sheng Shi, if you can go to the next slide. You may already know about GIRO. You may pay via bank transfer, Pay Now, AXS, SingPost. These are all systems that IRAS puts on their website and tells you how to pay your taxes. But you may have noticed one specific payment type that is missing, and that's credit cards. And that is exactly where CardUp comes in today. So what is CardUp, and what's it got to do with income taxes? So let's go to the next slide. So how I like to talk about CardUp, we're all about turning life expenses into life experiences. What does that mean? I want to help you earn air miles, cashback, card points on expenses that typically don't accept a credit card. So if you already have a credit card, I'm sure you're very familiar with going to a restaurant, going to the movies, going to a shop, buying something, swiping your credit card and walking out. What we typically don't do is pay with a credit card for our rent or our mortgage, or in this case, our income taxes. And often those type of larger expenses make up 50, 60, sometimes even 70% of our expenses every month. So just think about the missed opportunity that you have. Imagine how many air miles, if that's your card type, you could be earning from putting your mortgage or your income tax through onto your credit card. So that's exactly where CardUp comes in. We are effectively a middle entity, allowing you to pay for any expense with your credit card. The best thing is everything is fully integrated. So whoever you're paying, be it the bank for your mortgage, be it tax for IRAS, be it your landlord if you're paying rent, will very easily be able to identify that the payment came from you. So it's a very seamless process. So I want to talk about how do you find the right credit card to pay for these large types of expenses. So let's go to the next slide. So whether you already have a credit card or you're looking to get one, these are some of the things that I like to think about when deciding which card to get, as in apply for, and which card to use. So the first one is, what type of card should I get? And this is on 2 levels. Level 1 is, what bank do I want to go with? DBS, OCBC, Citibank, tons of different banks available. And then the second level is, what is the card scheme that I want to use? That's Visa, MasterCard, American Express, China Union Pay. The way you answer that question is to decide how will you be using the card and what are the benefits you want to get out of using the card. So for me, I'm an air miles junkie. I love flying overseas. And so I look at credit cards that will offer me air miles. Someone else might be less interested in traveling, and they would be interested in cashback. One thing that I think a lot of us don't fully appreciate about putting an expense onto your credit card is that you get to buy yourself some time until you actually have to pay the bill. So let me give you an example. Today is May 8th, right? Let's say I put on my mortgage on my credit card today. My bill, my credit card company is not going to send me the bill until June 1st. And they'll tell me I don't actually have to pay the bill until July 1st. So what I've done is I've bought myself time between today, May and July 1st to, like, you know, get my paycheck in, maybe see if I can make more salary at work. So buying yourself time to pay a bill with a credit card is also a really big benefit. But the key consideration there is that last bubble. What are the repayment terms? All credit cards have fees associated with it. Typically, it's not a fee to have the credit card. It's a fee if you pay back the bill after the due date. So it's really important that you understand the terms of the credit card, the interest rate, penalty fees before you start using that. So let's get back to income tax. You've got a credit card and you want to pay for your income tax because you want to earn, let's say it's air miles. So let me tell you how it works using your credit card on CardUp. Sheng Shi, if you could, yeah, great. So it's very simple. Step one, you'll get your NOA, your notice of assessment from IRAS. This will tell you how much you have to pay by when. You then get to decide, do you want to pay a one-off lump sum, or do you want to pay it in installments, typically when you would choose GIRO. Whatever decision you make, you create an account on CardUp, you upload your NOA, and you tell us if you want to pay one-off or in monthly installments. Next thing you do is you tell us the details of your credit card. We will then, in step two, charge your credit card on whatever date you tell us you want to pay your tax bill. And then we make a bank transfer to IRAS. So on IRAS's perspective, they're receiving the money through bank transfer, a very common payment method that they would have, but you're benefiting from putting it onto your credit card. So that's why I like to stay in step three here. This is when you get to sit back and relax. So like I mentioned earlier, I love jumping on a plane. And so now you can just sit back, relax, and watch those air miles roll in. And the big decision you have to make is, where are you going to fly to? Australia, Tokyo, Bali, London. And actually, if you're flying to London, let me know, because I've got a ton of recommendations for you. So the key thing here is it's super simple to set up. IRAS will easily reconcile that you paid them. Even though you paid them through us, IRAS, we make sure that IRAS knows exactly who paid them and on time. So this is a great way to work, especially if you have GIRO. Instead of going directly to IRAS to pay your monthly installments, come through us and earn credit card points in the process. So hopefully now I've convinced you, pay your tax bill with your credit card on CardUp, but I know what many of you are thinking. What's it going to cost? And how many air miles or cashback am I going to earn? We've made it super easy for you. So we've created a calculator on our website, and I'm going to walk you through now how to navigate the calculator. So let's start in the top left-hand corner. First of all, you say, do you want to earn miles or cashback? In this case, I've said I want to earn miles. Then you tell us, do you want to do monthly payments or yearly payments? I've chosen monthly. And then just input all the expenses that you want to shift onto your credit card. Today, we're talking about income tax, but like I mentioned, we can do rent, insurance, school fees, car loan. We've got a wide range of payment categories that we accept. So in this example, I've put in some example expenses. And now if you look in the top right corner, that comes out to a total annual expense of just under $50,000. So imagine that. Imagine how many air miles you're going to get from $50,000. Well, if you look at the second section on the right, I've then said, I'm going to be using my OCBC Visa card. We've got a full list of all the major credit cards in Singapore. So you can edit whether it's DBS, Amex, Visa, OCBC, whatever. So we've now calculated if you put close to $50,000 on your OCBC Visa card, OCBC will give you just over 60,000 air miles, which then allows you to get to the last section on the right. Where do you want to go? So here I've said, I want to fly business class. You could also say first class. I want to fly business class to Bali. This calculator then churns out, well, if you bought that as a flight, it'll cost you $1,154. If you pay for that flight with air miles, it will only cost 42,000 air miles. So I'm sure you can do the maths. You've earned over 60,000 air miles from all these expenses, and now you're flying to Bali in business class for 42,000. Hopefully that makes sense. Now, what you'll see at the bottom is your flight savings. This is where we talk about what it costs. So let me start by saying, when you go to a restaurant, let's say I pay my dinner bill is $100. I hand over my credit card, the restaurant takes the $100 and I walk out happy. What you may not realize is that the restaurant's only going to get about $97 when they claim that money back from your credit card. That's because the restaurant has to pay a processing fee for accepting credit card payments. That's typically what happens on a day-to-day basis. You go to a shop, you pay with your credit card, that shop pays the credit card processing fees. What we've done is we've reversed it. Because also, if you think about it, IRAS is not going to be willing to pay for you to pay with your credit card. So in this situation, we're basically saying you pay the fees. And so CardUp will charge a small processing fee every transaction you make. So if you go back to the top right of that picture, you'll see I've put in CardUp fee 1.75%. Now I know what you're saying. First of all, you're saying, Candice, 1.75%, that's so low. That's nothing. To earn all those air miles, fantastic. But you know what? To make it even better, I'm going to give you a special offer. But before I get there, let me explain this a little bit more. So let's go into the top. So I'm saying if I pay a CardUp of 1.75% on $50,000 worth, I'm in at $872. But let's remember that flight to Bali is only $1,154. So even though I'm paying a fee upfront, I'm ultimately saving on the cost of a flight. And in this case, I'm saving $552. So let me be very clear. It's not in our interest, and certainly not in your interest, to charge you a fee higher than the rewards you're going to get. And that's why using this calculator is really important. You've got to check, what are your bills? What card are you using, to see if it makes financial sense. If you're using a card where the fee is going to be higher than the rewards, don't use us. I'll be the first to say, don't use us. You've got to make sure that it pays off for you. And that's why we make this calculator. So go to the website, cardup.co/calculator, and I think someone will add it into the comment section as well. So you can pay your income tax with your credit card. There will be a small fee associated with it, but I am so convinced that you will love using us that I want to give you your first transaction for free. So whether you want to use it on your income tax, your mortgage, your insurance, your car loan, whatever it is, with this promo code, you can simply schedule any payment type and pay no fees whatsoever on the first 1,500 Singapore dollars that you process. Works with any Visa card that you have. So, and if to learn more, just go, we've made a special website page, cardup.co/Endowus, and you can see all the details. You'll find the link to the calculator, and it's super easy. So with that, Sheng Shi, keep me honest. Do you feel like I've given you enough information about how to optimize your tax bill this year and turn what would otherwise be a very big outflow of cash into potentially a business class flight to Bali? Did I manage to do that?
Yes, of course. I think I'm just thinking about, like, running through my head some of the scenarios that I can bring it even a step further, right? So, maybe just thinking about how this system works and how can I, maybe even amalgamate different tax bills with my colleagues, with my parents and whatnot. Like, is it possible for me to use a single CardUp account to pay for my family members' bills? Is there any restrictions on it? Because, how does that work?
Well, first of all, Sheng Shi, I love that you're already thinking about telling your friends and family about CardUp, because sharing the love is definitely in all of our interests. But in a short answer, no, but. So the no is important because when you create your CardUp account, the account details are very specific to you. You're using your SingPass details to create your account, and then we use your NRIC number to make sure that IRAS knows that you paid what amount on what date. So the extension of that is, no, you cannot pay for multiple other people from your CardUp account. They will all have to create their own CardUp account. However, it's super quick to create an account, and you can even benefit from getting your friends and family to sign up. So here I've given you this free promo code, the Endowus promo code, when you make your first payment. But Sheng Shi, if you refer your mum, your brother, and your best friend, you refer 3 people, you have your own unique referral code in your account, and you can also give them a 0% promo code. And to thank you in return, we will give you 3 0% promo codes. So it's in your interest to not only tell your friends and family to sign up for CardUp and pay with their credit card, but also by you referring them, will reward you in thanks.
I see. Okay, then I probably don't want to show my friends this webinar and quickly sign up.
Okay, just keep it between us friends.
Yeah, just another question on that, because I specifically talk about tax bills, but does that mean it's the same mechanism as well for other form of bills, right? Because, for example, mortgages or car loans, will it also be tied to my name?
Yes, it will. Because when we make the transfer, we say this payment came from this person. So, and look, sometimes we get questions about the security of our platform. Let me be very clear. We are regulated and licensed to operate in Singapore. We've been here for over 5 years. We follow all the rules and regulations. And an important part of following the rules and regulations is that we check that you are paying for your expenses and not somebody else's expenses. So that's really why we don't allow you to pay for other people's expenses, because we want to abide by the rules and make sure that we're following them very closely.
Yes, and to make sure that nobody over here is using the platform as a form of money laundering or
that is what we make sure we don't let happen every single day that we show up to work.
Okay, cool. I think let me think about it. I probably have another question. So, is there any advantage at all to go and pay your tax bill on a yearly basis? Because it just doesn't make sense, right? I think many of us are already on a GIRO arrangement. So, when it comes to a CardUp promotion, is there a difference between a monthly installment or a yearly installment?
So short answer, no. And what I like to say in answer to this question is that it comes down to 2 key considerations. Number 1, what's your preference? Sometimes, I just don't like a bill hanging over me. Sometimes I like to pay everything up front. Other times it does make sense to pay an installment. So it's personal preference. And then the second consideration is, do you have the money in your account to pay? Right? If you suddenly get hit with a big tax bill, let's say you're in that 22% tax bracket, that's a lot of money that you suddenly have to spend. So that's especially when I recommend, whether your tax bill is $100 or $100,000, that's when I think choosing a GIRO is a better consideration.
Okay. I think there's a lot of, it's just left for us to go and open a CardUp account now. So thanks for your sharing.
Thanks for the opportunity to talk about it. As you can see, I'm very excited about tax season. I know that seems like a bit unusual. Who gets excited about taxes? I am very excited. And let me say, I personally use CardUp to pay for my taxes every year. So I'm also coming from a place of personal experience.
Cool. Let's probably go to the Q&A now. Just give me a moment to pull out the Q&A. Candice, you probably want to do the same as well.
Yeah, great. Yeah, please. We'd love to see your questions. If you see at the top of the screen, there's a Slido link. Just type in Endowus 2023. We'd love to get your questions.
Yeah. So give me a moment. As I navigate through the screens. Okay, so we are on the Q&A part of things, the top most voted questions, and everyone please ask your questions, upvote your favorite questions so that Candice and I would be able to address them. So strategizing SRS withdrawal considerations. I broadly talked about it just now. It's very dependent on whether you're a Singaporean, a PR, or a foreigner. But what you should do, is to really be careful with how much SRS monies you have, right? And to make use of the 10-year, period of 50%, the 10-year period of no penalties, as well as having only 50% of the withdrawal, that feature of SRS withdrawals as much as possible, right? Spread it out as widely as possible, and make sure that you don't pay any more taxes than than is necessary, right? So that's the how you can strategize around that. Yes, I think the next question is pretty clear. Why not?
Yeah.
Candice,
One thing I would, just one thing I would add.
Hmm.
When you do GIRO, you still have to set up your GIRO arrangement with IRAS. Let me be very clear about that, because when you say to IRAS, I want to pay in installments, IRAS will then say, okay, you owe us X amount every month. That still has to happen. Then what you do is that you come to CardUp, you upload that document that says you've signed up for a GIRO plan, and set up the payment to match, and we'll process it on the right timeline to meet those payments. So one of the questions we get often is, will CardUp and IRAS double charge me? And the answer is no. What we do is we make sure we charge your credit card and pay IRAS before IRAS attempts to charge your GIRO payment. So we make sure that that's settled before the IRAS due date, so that when each month rolls around, IRAS checks its system and says, oh, this person's already paid. We don't need to charge them this month. Let's look again next month.
Okay, there's a newly upvoted question. How do you let IRAS or the insurance company know that you're using CardUp? Or do you not have to let them know that you're using CardUp?
This is honestly where I think part of the magic is. You don't have to tell them, because they will still receive a bank transfer every month. That bank transfer will still say who sent them how much money. There will just be an addition to it that says CardUp. It will say your name via CardUp. So really, that's what's so great about it. And, we've got a lot of customers, let's say people who are sending their kids to school in Singapore, people who are paying for their bus fare, people who are paying their insurance. We wanted to make this simple and easy as possible. You don't have to tell the end recipient that you're doing differently. We will make sure that it's very clear to them that the money was sent from you, and that's to settle your bill.
Okay, there's some questions around, whether it includes premium, whether these CardUp payments, including premium payments as well. The answer is yes, right? Based on your slide.
Yeah, I mean, and maybe Sheng Shi, the definition of a premium payment, but if not, please add another comment describing what you mean specifically with premium payments. But in a nutshell, we accept all types of payments. I mean, we even had somebody buying a Tesla car on the CardUp website through us. And, to me, I think that's a pretty premium payment. So yeah, no matter what your payment, we accept most common payment types, whether it's a $50 bill or if it's a $500,000 bill.
Okay, just maybe one more question. Hi, I'm speaking as an active user of CardUp. If we have an ongoing tax payment, do we have to remove GIRO?
So let me make sure I'm clear about which way. If you've gone straight to CardUp to set up your tax payment, everything's fine. If you've gone to the IRAS website to set up a GIRO payment, that's what you then have to upload to us. So it kind of depends on which way you've gone. But in a nutshell, you should keep your GIRO payment on the IRAS website, and we'll make sure we pay it in advance. Hopefully that's clear. If you have any questions, feel free to contact us. All of our contact information is on our website, cardup.co. You can email us or call us. Send us a message on Facebook. We love getting messages on Facebook or Instagram, wherever it makes the most sense to you, and we're happy to answer those questions.
Yep. Yeah, I'm just trying to be a bit mindful looking through all the questions, because some of it is really, really technical, and we have a really broad base of audience here. So
Yeah.
just maybe looking through the other questions. So there's one that says, I'm a local and my kids are studying overseas. Can I have some discount in income tax? Maybe let me take that first, Candice. And you can add on to that. So there is income tax relief that is automatically applied, and that is for Singaporeans, PRs and foreigners who have kids who are dependent on them. As long as they are below 16 years old or they are on a tertiary education, you will be eligible for a qualifying child relief, right? So that is in some sense, the tax relief will count as a discount on income tax. Would they be eligible for? I guess they would be eligible to use CardUp for income tax.
And that's a really good question, because also CardUp works for your overseas expenses. And so we have a lot of people like that person who asked the question who are sending their kids overseas or who themselves are going to study overseas. And yes, you can use your CardUp, your Singapore credit card, to pay overseas expenses and earn air miles in the process.
Okay. So yeah, there's also some, just quickly looking through questions.
I've actually seen a great one, Sheng Shi, if you don't mind. I see some from Kian Lim. He said, how does CardUp compare with Citibank Pay All? Very similar model, allowing you to pay your credit card, allowing you to pay large expenses with your credit card. The big difference is with CardUp, you can use any credit card from any bank, and obviously Citi Pay All, you can only use a Citi card. So that would be the one thing I'd say there. And then JR, I saw that you asked, is the offer available if you pay via installments via GIRO? Yes, it is. And actually, let me add a little bit more context there. So the promo code you're getting because you're attending the webinar today gives you 0% on your first transaction. After that amount, the fee kicks in. And right now, if you go to the CardUp pricing page, so do cardup.co/pricing, you can see all the different promo offers that we have. So I'll be honest, officially, our pricing is 2.6%, but we're always doing promos. So you can always find savings. So just go to our pricing page and check it out.
Cool. There's also another question that I realize is a bit special. As a financial advisor, how do I get support when my clients want to onboard for business purpose expenses?
Yeah, good question. So today we've been talking, to everyday people like you and I need to personally pay my income taxes. But CardUp also works for business expenses. So whether you're paying a supplier invoice or your employee payroll, you can do all the same rules apply for business expenses. So that's the first part. The second part is if you are, let's say, an accountant and you're helping a lot of your clients, we have a whole separate process for rewarding you for referring businesses to come onto the CardUp platform. So if you go onto our website and click in the navigation, there's a whole section about referring people, and you'll see in there all the details to sign up. If you have any issues finding it, just email hello@cardup.co and we'll send you the link.
Okay, there's quite a few questions around reducing your taxes, and I'm just going to answer them. SRS is not worth it as a foreigner, as a PR, $17,000, $15,300, I guess. Only reduces taxes by a few $1,000s. I could have invested the money, get returns while not having to wait till 63 to withdraw money, right? So I think there's a part of it that's probably missed by you during the presentation. So what you can do with your SRS, with SRS contribution is really to invest it, right? You should invest it because as I was saying, and you probably also are aware of, is that your SRS account only earns you 0.05% interest every year, which is basically nothing, right? So what you should do is to invest in longer term investment products like equity funds, for example, right? And to grow it as if it's what in basically products or funds or fund products that give you the same exposure as what you would have invested in with your cash, right? And we have a suite of investment options available, be it like index funds, smart beta funds, tax specific strategies, or even if you are not very clear about what to invest, you can use any of our advised portfolios and we will allocate you a portfolio based on your risk tolerance, right? You can make it as simple as it is or as difficult as you want it to be, right? As complicated and sophisticated as you want it to be. So yeah, definitely invest your SRS if you were to do the top up, right? The next question is that I'm 72 years old. I've been making maximum voluntary contributions to my CPF. My Medisave account has too much money in it. Can I withdraw excess funds? So unfortunately, no. For your Medisave account, there's no way for you to withdraw it other than, using it for any medical payments, insurance premiums, and any of your outpatient treatments, right? So you're not able to withdraw anything from your Medisave account. And I guess based on your questions, at your age, you also realize that for people of an older age, actually most of their CPF voluntary contribution is being allocated to the Medisave account, right? So anything that overflows from your Medisave account to your OA, those are actually the money that you can withdraw, right? So yeah, you may want to consider investing your that money instead, because even for very low risk options, you will be able to do more than 2.5%. Right. So there's a question about what's the difference between CPF RS retirement sum top-ups and CPF voluntary contribution and how they affect your income tax. Right. So this is actually a very, very loaded question because it really depends on whether you are a freelancer, a self-employed person, or if you are like at Candice and I, we are drawing a salary from an employer. Right. So the differences is that if you're employed by someone else, voluntary contributions, you're actually not getting any tax relief, right? But retirement sum top-up scheme, you are still getting you can top up to $8,000 and get $8,000 worth of tax relief, right? Yes. Do you get tax relief from topping up a CPF OA? Unfortunately, you can't just top up a CPF OA, right? Yeah, there's many questions, but I think we pretty much covered all of them already. So
sounds great.
yeah.
And for us, please do go to cardup.co/Endowus to learn more. Sheng Shi, where should everyone go if they've got more questions for you?
Yeah, you can just reach out to us at support@endowus.com. I'm sure, Candice, if you have any questions with your how you want to maximize or rather minimize your income tax next year, you will just drop me a note or reach out to my colleagues if you have any questions.
Yeah, definitely. Now that you've taught me all about it, now I have to act on all this information.
Yes. I guess that's the end of today's session. Thank you everyone for joining us today on a Monday morning, Monday evening rather. Evening. Yeah, it feels like a longer day ahead. So, but anyway, thanks for joining us. And we have the promo links again on the YouTube description. If you have joined us halfway, feel free to just rewatch it later. It will all be available online. And have a great week ahead. Thank you.
Thanks so much. Thanks everyone. Thanks for joining.